Right. Well, it gives me great pleasure now to bring on board Mr. Harjeet Toor to talk about where the credit card business is moving, how should one understand into the moratorium, what various banks and credit card companies have announced. Harjeet, good morning. Thank you for joining us. It's a powerful comment from RBL Bank when they are claiming that 65 to 70% or 70 to 75% of the total pre-COVID transactions are back. Could you throw more light on that? Are you referring to volume of transaction, and what is happening to the net transaction value?
Yeah, so actually we've been seeing at RBL cards that spends have been consistently moving up as the lockdown easing started somewhere in May. In April, spends had fallen to almost 45% of normal levels. And these picked up in May and we reached about 55%. And by the time we ended May, they were close to 60. For the month of June, that's when the unlock period really started, is where these spends have now gone up to almost around 75% for the full average month of June. And if we look at last week, they're almost touching about 77, 80%. So we're seeing traction both on number of transactions as well as value. So it isn't as if the ticket sizes have gone up and therefore the transactions volume hasn't. I think it's evenly spread, and that's a good sign, which we're seeing.
Okay. Could you tell us that in which category the uptick has been the largest in terms of in category where the demand and the transactions have picked up?
Yeah, so I think as expected, categories like groceries, insurance, etc., were going to be strong. Utilities was another category which came up, in fact, fairly strongly. And here we've seen both transaction ticket sizes, number of transactions, all increased during this period. And this has been seen right through April onwards. This month in June, we've seen categories like fuel, apparel, dining pick up. And interestingly, dining is coming back with food delivery transactions. And here, it's not yet the number of transactions in food delivery which have come back to normal, but the ticket sizes are significantly higher. I mean, we're seeing about 20 to 25% ticket sizes go up. This month, we've seen durables pick up, and we'll have to see whether this is pent-up demand which is playing around or is it sustainable. So that is something we will see. Obvious categories which are still low and have not picked up at all are categories like travel, hotels, etc. And I think they will remain subdued for the rest of the year as well. Luckily for us, the spends in this category are not more than about 4%. So I think we will be able to make up these spends through other categories which are seeing increases. We've started promoting some low-cost EMIs. And another thing which we realized we had to do was to bring offers from small merchants in your neighborhood areas, because we realized that at least for a couple of months, our customers are going to be hesitant traveling distances for their normal shopping or leisure. And malls are also closed. And therefore, these localized offers from these small merchants would be of great value. So we're now enhancing our app, and hopefully in the next 15 days, customers should be able to see on the mobile app itself, the offers which are available around them.
Sure. What do you feel about the threat of e-payments and UPI as well? In certain cases, they're complementary. For example, loading money into your Paytm wallet with a credit card, which is something that we've seen a lot of people do. But yesterday, for example, Google said that they'd offer credit via bank partners directly on their UPI platform. So is that a threat to the credit card industry? Just talk us through some of the dynamics there.
Yeah, so I think for that, it's important to understand why do people use credit cards? I mean, while it's a great payment mechanism, there are other payment mechanisms as well. Debit cards is one, UPI is the other. And therefore, the reason why credit card spends continue to grow and continue to be strong is because it's a mix of both credit, which is the lending facility, and payment all rolled into one, coupled with the fact that you are in a position to offer attractive rewards and benefits to customers and a free period in terms of paying back. Now, when you package all of this, I think that's what makes credit card what it is today. So I don't think there is a threat if there are other players who would, let's say, try and combine lending with payments. I think it's complementary. The good part is that more and more this happens, the digital adoption of the customers go up, the cash usage goes down, and that has an effect on the credit card as well. So we haven't seen, in fact, any drop on account of this. In fact, wallet loads have strengthened despite UPI coming in a very strong way. If I was to look at the last 1 year, wallet loads have strengthened, and even in this period, we've seen wallet loads strengthening. So I think it's good. Also, to put things in perspective, wallet loads are about 7-8% of the total spends which are there. So it's not as if it's a major category of spends.
Harjeet, we were just analyzing as to how spending or credit card spending in particular has come to pre-COVID levels. But one very critical aspect that one is missing here is that we were already in a slowdown pre-COVID as well. While essentials will grow, discretionary spends will definitely come down, given that there is, overall a slowdown, and people will sort of think back on their spending patterns. When do you actually see growth to come in, and how long do you think before we materially jump back to the pre-COVID levels or see a significant growth come in rather?
Yeah, so first let me just refer to the industry because, our card base or our card customer behavior may be different than the industry. But my expectation from the industry is that it will take a good 4 to 6 months at least for us to somewhere come close to the spends we used to be having. Because in the industry, the travel and hotel spends were fairly large. And therefore, for them to be kind of compensated for, and the fact that people for some time will continue to be more conservative in spending, this will be a slow road. So what you've seen now is an immediate jump back, which is more around, I won't call them all essential spends, but spends which are normally which you do, which are not considered as discretionary or luxury. I think those spends will take time. Now, for us as a bank, most of our spends are around this category. In fact, as I said, hotels and travel only account for about 4% of our spends. So institutions or banks which have a card base which is more attuned to daily or regular spends will see faster bounce backs. People who had high ticket spends as part of their portfolio will see a little longer to come back.
Okay. There is a genuine fear that credit card as a product offering will lose its relevance. I'm using more UPI to make daily payments. I'm speaking out of personal experience. That's the trend which is there in China as well. And when you have got marquee players like Google, Reliance, Jio coming up with digital innovation, and they also give you a lot of benefits if you're transacting with them, how will credit card companies, in a sense, be able to counterbalance and will be able to come back with a product offering?
Yeah, so I think a couple of things we need to keep in mind. I mentioned earlier that credit card is a mix of a credit line plus a payment instrument with benefits attached. So there is a certain segment of customers where this appeals, and therefore they will continue to use this. The other piece we need to keep in mind is that the card penetration in the country is still extremely low. We're talking about a card base of about 50 odd million cards. We're talking about, if you look at the unique number of customer base, there'll be less than 30 million. Now contrast that to the debit card customer base of 850 million. So there is enough for the card market first to grow and penetrate. And the second is to have its own niches where people will prefer this. It's not as if the entire movement to digital will be captured by credit cards, and therefore that spending will move into other categories as well. But I don't think we will see cards either come down in terms of their spend per customer basis. They will in fact continue to grow. But I think the number of cards you will see, at least for the next 4 to 5 years continue to grow because the penetration is just extremely low as compared to other countries.
All right. Thanks for joining us, Harjeet, and taking us through your views on how things are likely to pan out for the credit card industry. We're going to leave it there. We need to take a very quick break. We'll be back in just a moment.